Good day, good morning, good evening. Shalom. Assalamu alaikum. How's everyone? Let's get a quick audio check. Por favor. I'll begin the stream. Good morning, Ailey. Good morning, Haroon. Good morning, Zach. Good morning, Easy Claps. 555, perfect. Okay, analysis. Looking for the previous day low to be reached, and we'll use that volume bounce / new day opening gap in a moment. It's already due to swing up enough, failed to touch the open of the order block. Now, I don't mind if it wants to do another rally higher, take out the intraday high, and then run to the previous day low. We'll see. But obviously, ideally, a flat run to the previous day low is the best. Then we'll also look at the 2nd of February's low, and then if we have a lot of juice, we'll look at the 21st of January's low. Now we're coming off the back of two large daily ranges. Well, multiple large daily ranges, but massive ones. 808 handles yesterday, 769 handles the day before that. It's really evident when you look at the 4-hour chart how massive the ranges are. So we may have to tiptoe around a little bit more carefully this AM session. Just keep that in mind. I'll remind you later on as well. But you can see large range, consolidation, large range, that overlaps the previous large range in a similar amount of candles. That's a good sign of institutional inflow. It wouldn't, I guess technically it's a balanced price range, but I don't need to view it as that because I'm seeing it as we're taking out the relatively good highs, let's put in another high, and we have a reason to go lower. Pretty much. Bearish, hourly, order blocks. 15-minute chart, Asia consolidation. London Judah swing, fails to take the London high, reacts to the lower quadrant of this event horizon. And now I'm looking for those lows. More number. DXY was inside day yesterday, could be nice too. That's a very good shout. That's a very good shout. I haven't even looked at the dollar for a few days. Yes. Very good shout. Very good shout. Take this off. Oh, it's the same. Yeah, I really like this price action. I think it's going to be a decent morning. Even though we're coming off the back of two large range days, we've had enough consolidation here that the AM session, at least the first 20 or so minutes, should have a good enough price run. So that's not a huge concern for me. After 10 o'clock, yeah, it'll probably slow down a little bit. But, I mean, that's typical nowadays. Typical. This is our hourly order block. I like that it's rejecting here. I don't need it on this 1 minute, so I'll take it off. Okay, a couple of levels I have on this chart. 17th of December's new day opening gap. Saw it quite a while ago, you don't need it on, but I'm opting to use it. February's midnight opening price. This is the midnight opening price from the first day of the month. Yep, first day of the month. Let's use today's midnight price. and 8:30. Okay, with that, we should be ready to navigate the morning session. What's up, DB? Like the stream if you're in here. Oh, it's SMT with ES. That's nice. There's also a bullish one. I want to see ES break down below London though. Yeah, I want to see a breakdown on ES. Because if this starts to find strength at the open, it could just have a really nice low resistance run up. And then NQ could do the same because it's already taken out sell side liquidity. So that's a bit of a conflicting thing, but that's okay. $25,447. Nice objectives on the regular trading hours chart. And now we wait for another 3 minutes. Today's new day opening gap. Thing is, on the regular trading hours chart, we're going to open up down here, and it's going to want to fill in maybe the full opening range gap, maybe just a part of it, and that's going to encourage higher prices on this chart. Well, on both charts, but you know. 447, 447. Could take the pre-market high and then a London high. It really just depends on the opening minute. And then ideally goes lower. Oh, wants to play touch and go. No complaints here. Oh yeah, this is the previous day low that we're targeting. That's pre-market low. Nice. Closed through the level, so it's more likely to continue than if it had closed up above the level. Let's make this a bit bigger. Yes, open above. Oh yeah. But if you look at the electronic trading hours chart, ES still hasn't taken the London low, so I'd expect this to start catching up. But because NQ didn't take out the London high and ES did, NQ is a distribution asset, so it's more likely to have the price run first and more amplified. Why is this not showing up? Okay, 930 doesn't qualify as our first presented fair value gap today. This might, the suspension block, depending on what this candle does. Okay, this is first presented, but we have a fair value gap up here as well. And this was at 930 price run. So it can retrace as far as this fair value gap. I would like to see it, if it does trade up into this fair value gap, find resistance at this breaker block low, because this pre-market low is not a breaker block. That. I'm not going to keep it on because we don't really need it. But even though we have a premium opening range gap, it did touch and go. So where it just touches it, goes in my, like what, one tick? Look at that tiny, tiny little stubby wick. Just a couple ticks. Image is not showing any respect to that level. You want to see the bodies ideally close below the consequent approachment and not deviate from the level. If it does trade above, it's no biggie because we have the breaker, but the ultimate form of weakness here would be below consequent encroachment. Like that, that's good. That's very nice. Because it closed a little bit below consequent encroachment, but it's done some buy-side damage. This is generally a sign that's going to amplify. Annoyingly, it has to work through these wicks, so that's a bit more resistance, but a previous day low should be able to ignore wicks like that. There's a strong enough pool of liquidity. Okay, it's gone beyond that level. Put that breaker back on. That's annoying, because now it's going to leave the previous day low alone. I still want to see something around here fail, and eventually trade back down to the previous day low. What's the significance of the 2 a.m. first print fair value gap, just for gauging? Yeah, so the London session has a couple of first presented arrays. This is from yesterday, or rather the day before yesterday. Now, London has 1:30 to 2 o'clock as an opening range, and that has a first presented fair value gap as well. But then you also have the first fair value gap of the actual London session, not just the opening range. So yeah, it's just for gauging. That's alright. Again, I want to see it keep failing here. That's a nice S&T. Good sunrise. Good afternoon, Mr. C. How do you do? Okay. Not a brilliant close, because I would have liked it to have closed in the fair value gap rather than outside of it, because it wicked in, then closed outside, so that leaves me in a bit of a 50-50 spot, because I can see this becoming a bullish order block now. I'm telling you, if we leave the previous day low alone, and we start to see a rally, ugh, it will just create a frustrating price condition. And those are the conditions that I don't like, because it makes every retracement look like it's going to be the run into that previous day low, but then it'll, one of them will eventually be, but it's just plowing against that bias. That's technically good. Because it closed, or rather it wicked right at the consequent encroachment of this elongated fair value gap. How's ES doing? Okay, closed above, so that's now bullish order block. I would not look for any type of long trade until the previous day low is taken. So any rally now, I'm seeing as a suspect rally. It may want to go all the way back up into the opening range gap, maybe fill it in completely, and then turn around. Ideally, it doesn't need that. I don't mind it feathering this 930 opening price level, just for that premium sensitivity, because especially with the current day new day opening gap and the 830 opening price there, if it can just feather that level and then reject, that would be a good enough setup to sell. But I don't think it's wise to go long when it's working against the previous day low. This is such a strong draw because my daily bias is to see that low taken out. This low, and then next would be this low. Right, there you go. That's exactly why you don't want to fade that. Rally to opening range gap, consequent crushment no long. Nah, come on, bro. Nah. From previous day low, I wouldn't think it would be done. I would think it would go to the low from the day before that. Well, SMT. SMT with these lows. Indecisive candle, to be honest. Not indecisive as in it's a doji, but indecisive as in that doesn't really give me a lot of information. This one. Okay, that's now another bullshit block. Ideally, that's enough of a feathering on that level to just reject. It doesn't matter how high it goes here. You shouldn't chase buys. Even if it's going to go all the way into the previous day high, going against that previous day low when it's so likely, in my opinion, is, you're just being a contrarian for the sake of being a contrarian. It's better to just put yourself on side. Well, when's it going to turn around? You have to wait, and when are the signatures there in price? When is there an inversion fair value gap? When is there a change state of delivery? When is there a market structure shift? When does it go into the premium? And then reject the low end of the previous day low. So until then, nothing's really very valid. 15-minute smooth highs already manipulated sell side. Smooth lows or smooth highs? This. I consider that unfinished business, to be honest. News might make it jump. Right, no chance it. Low probability. Since yesterday's a bigger move, possibly. Yeah, we said that at the start. ICT was tweeting that as well. There is 10 a.m. services PMI, so that's something to be wary of. I like the 3 drives on ES. So it tickled that opening price. So the opening range gap encompasses which 2 prices? 930 and 414. 930 is itself an opening price. So like we have 830 opening price, midnight opening price. 930 is an opening price. That's part of what makes an opening range gap sensitive. So when it's wicking this level, it's treating it the same as like if that was 830 and it wicks it and then it rejects. That's exactly what this is doing when it's reaching into the opening range gap ever so slightly, takes out this high and then runs lower. That's premium sensitivity. That's presented fair value gap of steel. Now, even if there's a setup to the sell side, I probably wouldn't take it because we're in a muddy condition. And we've got the 10 a.m. news coming out, so I'll just wait for that. Yes, it's shooting. Total range because small opening range gap. Partially, but this isn't that small. Small, I guess it's kind of small, but I would argue it's more about the large range day yesterday and the day before, mainly. And this is just like the cherry on top. Even if you have a large range day, if you have a tighter Asian and London session, you can have a good open. Obviously, today wasn't a tight Asia London session. It was a tight Asia, but not a tight London. And pre-market expanded too. When yesterday's daily range was 800 and something handles. 808. The day before that, 769. So it's natural to expect something lower probability in the morning. Hello, Otaku. like the stream if you're in here. We're in the macro now, so hopefully we can see some form of distribution. But even if you do, wait for 10 o'clock because we're not in a good price condition. In fact, I'm going to put it in big letters. Minecraft. Taco streams Minecraft in the Discord server. He's it's a bit strange sometimes. Okay, it's nice displacement, but you still, well, it's not nice displacement, it's just one candle. You can't get caught up in this because it can easily return back into its range bound condition. So don't try and chase it. Yes, it's the macro. Yes, it looks like it's going to break out. And even if it does, it's still not worth that trade. You should just wait. Just wait. Hello, Atlas. Nice to see you, buddy. Oh, Shrek, your Discord name is Iman, right? Eman? You'll notice I'm not using this as a first presented order block. Technically it is. These are two dangles candles that are closed above and it's the first two ones. But is it a clean, is it an obvious PD array? No. It's not. It's caught up in this consolidation. So even if that's there, I'm not going to use that as a first presented array. I'm not going to extend it out for multiple days. I'm just going to ignore it. PD arrays from within a consolidation are the weak ones. Those are the ones you don't use. Little bitty breakaway gap right here. See the sensitivity above the February midnight opening price. This is not even the midnight from today. This is the opening price from the beginning of the month. Previous day low is a draw. Yeah, same. That's what we're looking at. And then beyond that level, we have the previous day low is a draw. So 2nd of February is low. Yeah, I agree, Atlas. Nice to see that we're on side. Even beyond that as well, we have good draws to the downside. This change state delivery level, this daily low. I can see them waiting to take this in PM, so I'm not looking at that for this morning session. But the main things I'm looking at are the previous day low and the 2nd of February's daily low. Okay, you want to see it tap the low of the suspension block, maybe stay in the lower half, and then trade low into the previous day low. Yes. This is the graded range from the 2nd of February's low to the 19th of January's new week opening gap level. These are both new week opening gap levels. Just graded it from the low to the other low. You get these really beautiful quadrants. Really beautiful quadrants. Second best trader. Who's the first? So once daily turns bullish, the standard deviation is going to be a sign above all-time high. Yeah, maybe, because I think the dollar's going to keep going lower this year. I do think all-time highs in the next couple of months, this month or the next month, is very likely. Very likely. And then hopefully, between spring and autumn, it starts to trade lower. That will be the seasonal tendency. So that's what I say. How this guy is Valeric? What are you talking about? Do I not sound like Valeric? Yes. Yeah, I like that because of volume imbalance followed by another volume imbalance. Like that. Didn't close the order block, but it is a volume imbalance that indicates it should start trading lower. When already bearish, not just randomly, but if you're already bearish, there's a bearish open on the candle, then yeah. I sound like a robot, an ICT effect. Wow. This is what people think of me. How does taking a bullet with internal range liquidity work? I can't seem to get any with external range liquidity lately. It's just rips and retraces all day. Okay, this here, where I took out this high, that's technically a silver bullet because it takes out buy side and it trades lower. Now, is this a clean setup that you want to take? Absolutely not. No, it's not. But technically, silver bullet. Now, you're struggling with silver bullet right now because you use apologies. You're struggling with silver bullet right now because you're looking at external range liquidity only. And that can generally serve pretty good if you're using pre-market range high and lows, if you're using London high and lows, Asia highs and lows, daily highs and lows, etc. But recently we've been in conditions where it just rips off the open. So it's not your fault that you're not seeing that many lately, but you may want to become more, how do I say this? Just more well versed in looking at internal range liquidity instead. The black belt is really hard to form. Well, we said there's no black belt today because we're bearish. Black belt is like a once a week, maybe twice a week type setup if you're lucky. Oh yeah, previous day low. More market wizardry. 3 days in a row. Even with horrible price conditions, it delivered. Raising for the previous day low. Thank you. Yeah, silver bullet. Zach. Here's a London session silver bullet. Takes out Asian high. Takes out its own internal range liquidity around near 3 o'clock. It starts to break lower. You have to sit through some consolidation there, unfortunately, but it is between the new week opening gaps. Respects that gradient level. Breaks lower, breakaway gap. Internal range liquidity in the Asian session. Takes out the Valorant spool point. And I love my TD arrays. Okay, there's 2nd of February's low as well. It could keep ripping lower. I wouldn't look for it to reverse because I think we will close today below this opening price. So the close of the day, I'm anticipating, doesn't matter what the low of the day does, it should be at least below that opening price. That would make this a bearish order block, and then that would set us up for another move lower down to this daily low. But that's not to say it can't take out this daily low and then close beyond this daily low. That would make it really bearish. This one. But my idea today is that it closes beyond this level on the daily chart. Monday to Wednesday, classic buy sell days have been cooking. Yeah. When the change day delivery and market structure shift in that London night, are you explaining? Yeah, sure. Market structure shift. Value gap, breakaway gap, another market structure shift. That's a change state delivery. I'll make this orange. Another change state delivery. Yeah, those are the only two ones I'd consider valid. This is a very low spool point. The low / high right at the beginning of a session. Yes. Why marked body low for low? No, not for the low of the day. The low of the day would be this, the wick low. I'm saying that we should close beyond the opening price today. So this daily candle should close beyond this candle's opening price. That's what I'm saying. What are your thoughts about order flow? I've never looked into it. I've never used it. ICT doesn't like it, but I have two friends that they use it and they like it. So, but they use it in combination with ICT. So it's just like an extra addition. But they're not the best ICT traders. They know fair value gaps, they know order blocks, and they know like a liquidity pool or two. They're not really that good at ICT, but they're good with the order flow tool. So if it helps, it helps. Anything that you find is a valuable tool and it makes you take better trades, use it. Don't listen to what I say. Order flow and ICT on paper is insane combo. Yeah, but ICT really hates it. Who says that like it's fake? It's rigged. Oh wait, a quick note on VSP. Before you go and start using these, don't just look at any VSP and expect price to trade down into it. They don't work in trending conditions. It has to be in a purge and revert type condition. I'm gonna teach these soon, but let me finish my black belt model series first. I have like 4 more videos I want to do, and then I'll teach that. It's really simple. It's not complicated at all. World number 1 scalper is an order flow trader. ICT says order flow is fake. Not order flows in the candles. Order flow is in that order flow tool. I'll find out. There you go. This thing. We have all these like bubbly stuff. I don't like it either. It looks weird. I don't think it's necessary. Yes. It's like these are pools of orders, so you can see the orders, but these can be spoofed. So large funds can come in, they can put a bunch of limit orders at a certain level, and then before price goes into it, they can remove that level, or they can remove the orders at that level. So this, in theory, would tell you where the orders are, but orders change constantly. Whereas open, high, and low close, they never change. These candles never change. Once they're in price, they're in, and they can't be changed. So that's why ICT says it's not a good thing. If you find it good, then use it. ICT is using this shit in 22. Yeah. You have the live data though, you can see when it changes. That's true, but this never changes. So I think open, high, low, close is just more effective. But used as a confluence, I don't see anything wrong with it. But used as, your draw on liquidity is based off this, that to me makes no sense, because you can have a bunch of orders at this high, and then price starts engineering some liquidity here, and then the orders at that high change. So you've gone from looking at that draw on liquidity towards it being a different level. Now, that theoretically isn't wrong, but it can lead you to take trades that put you offside. Whereas if you're looking at an open, high, low close chart like this, you're never seeing a change like that. It just doesn't change. Does that make sense? Volume definitely doesn't work. No. Order flow, maybe. Volume, no. Volume's bullcrap. I used to use volume as a retail concept trader. I used to do supply demand, RSI, the super trends. I used to do EMA crossovers. What else did I do? I tried trend lines once. The worst thing you can do as a trader is do the wrong thing and get the right outcome. So I tried trend lines one time, trading gold. Well, back then I was doing it on the CFD with fusion markets, and I was doing these trend lines. I was massively over leveraged, and I ended up making a bunch of money on one trade. And obviously, I ended up losing it all trying to do that strategy again and again because it was just luck. But I thought, oh, these work. I'm just doing it wrong because I had that one initial bit of success, and then I had to just, the market smashes you in, and you realize, no, it doesn't work. Lumi trader doing trend lines got ICT's book early. I'm jealous because I wanted that book early as well. But ICT doesn't like me. We had an argument on Twitter. That's funny. Volume works. I know someone using ICT and volume trading together. They're using volume information instead of market structure shift. I've used volume. I didn't use it with ICT, so if it's working with ICT, I would argue it's just volume being irrelevant and ICT being the relevant thing, and he's getting whatever. Let's say your setup is not forming as expected. I'm planning to start trading PM or from 10:30. PM's really nice. I love trading PM. In fact, most days I trade PM instead of AM. I prefer it. But I know most people are active during AM. Coming up for a nice retracement to continue short potentially. Maybe. I would say that we've reached enough sell side objectives, and I wouldn't look for anything. Yeah, I don't think I would look for a huge trade here. There's nice buy side objectives. It's a really nice reversal pattern, but I don't like the conditions we had right at the beginning. And because we had the large range previous day, and then the day before that, London expanded, and then pre-market expanded, and then now we've seen the sell side objectives today already met, I wouldn't want to be in a trade towards the upside, because I'm not saying it won't trade to the upside, but I'm saying if it does, and it might, it wouldn't be fast delivery. It would be grindy like this, and it would trade higher, but not in the way I want to be in a trade. Like, I want to be in these types of conditions, not in these types of conditions. And I'm not saying this is guaranteed, but this is more likely today to happen. So I don't like trying to be on side or trying to get into a trade when it's likely to do that. I tend to get caught in retracements when I expected reversals. The market structure shifts or sweeps. Still working on getting better, remaining optimistic, but also if the trend is really a friend. Narrative, strength and weakness, and yeah, those two things would really boost your performance with market structure shifts. Cappy hates PM. I don't hate PM. I like PM. But PM's a nice and easy session to trade. 25,600. No way. No way. Today maybe, but not this session. If that's what you mean. I mean, to be honest, no, I don't think that would happen today. No. ICT, do you mark every session's first 5-hour gap like you're using 2nd February London first 5-hour gap? Not every session. I do London and I do AM session. Sometimes I do PM session if I'm trading PM. And I do extend them occasionally. I used to put it on a different layout, but now I'm doing it on this layout. It's helpful. I'm gonna say it's very helpful. Take a look at your DMs after the stream, sure. Okay, I'll wait for this candle to finish, and then I'll talk a bit more about this price action. That's why I wait for the candle to finish. Because what I was going to say is if they leave this as a breakaway gap and it closes above these highs, that would be strong. But they didn't close above these highs, they just wicked it into the consequent encroachment of the 2nd February's London 2 a.m. first presented 5-hour gap and the bearish order blocks lower quadrant, or lower half rather. So, you know, weak, not strong delivery. You want to see strong delivery. Oh, well, we'll see if they leave this breakaway. It's a clean PA to be honest, just not trade condition for me. 50-50. ES is clean, not gonna lie. ES is really clean. I wonder if you can hear the helicopter in the background. I'm waiting to see this 15-minute candle. So we have a breaker here, but no 5-hour gaps, so I need a stronger, a weaker close. That's not great, to be honest. 10-minute chart is nice though. How come we left on Monday's lower intact yesterday in PM? I don't know. If you want me to be honest with you, I took a trade from this level, this level, this level. So I had a buy here, I had a buy here, and I had a buy here. I stop loss there, and then I held it until this high. So it's like a nice 2-hour-ish trade, which I did in the daily review yesterday. Is it true current conditions are high resistance liquidity making it hard to trade? 100%. Yes, January's been very difficult. If you look at the daily chart, excluding, well, it's February now, but January is from this point to this point. It's been really range bound. It's not been an easy month at all. I mean, since December's not been brilliant, but it looks like now it's starting to break out. I want to see something like patch and revert behavior. I don't want to see it run one-sidedly lower. Take out this low, maybe take out this low, maybe take out this low, but then after these two I want to see something like a rally, ideally. And then all-time highs, probably early next month, late this month. Yeah. You see what I mean? Engineering. Engineering, yes, of course, but not in a nice tradable way, in a I'll stay out of this type of way. I was able to pass my top step combine in January. It's in drawdown currently. Well, at least he passed. I had a lot of students struggling this January. So I want to see all those taking around until all-time high. Same. Nice. I mean, if you're able to pass the combine, that's good, because that's like a, you can't lose 2,000, but you have to make 3,000. Good return for a difficult month. What's your leverage looking like? Like per trade, how much are you risking? Just curious. $200 to $300 on 3 macros. So you can lose 10 trades in a row before you lose your account. Yeah, that's good. If you're doing that on your funded stage, I would advise you go lower, even lower, like half it, $100 or $150. Because if you just get into, I don't know what your rules are. Maybe you're doing 1 trade a day, maybe you're doing 1 trade a session. I don't know. But I would go half of that leverage now that you're on the funded stage. Because if you get 1 or 2 just silly trades, like losing trades, 2 in a row, 3 in a row, maybe you're having a bad day, you're tired, whatever reason, you just push the button a couple too many times. You're already now in like an $800 drawdown or $900 drawdown if you get 3 losses in a row. So, and recovering that would take a while. So I would go split that leverage in 2. Just use half of that. Personally. Okay, I'd like to see this fail. It doesn't really matter what it does because I wouldn't take any trades either way now, upside or downside. Let's say I have $2,000 combine. What's the best contract for NQ? I'm doing one trade a day. 0.01, 0.02, 0.03. Are you talking about CFDs or futures? If you're trading futures, you use the micro contract and use, however many micros it takes to be around $150 to $200 in risk on your evaluation stage. If you're talking about CFD, then I'm sorry, I don't really remember the CFD sizes very well because it depends on your lot size and your account balance. Okay, I think the price action's gotten a bit disinteresting now because regardless of it going higher or lower, I don't see it as very tradable. So I think we've had enough of a move towards downside. We've fulfilled our high time frame objectives. It's kind of engineering now. I think it will start to, like this is it, coiling up, and it'll start to unload that coil a little bit. See some speed either to the upside or to the downside. But either way, I don't think it's a high probability trade. So I would just chill and maybe come back in the PM because I think the PM should be pretty nice today. So thank you for listening to the stream. Thank you for your continued interest in my monologue voice and tape reading. It's 3 days in a row we got it pretty much perfectly, and I'll be streaming again tomorrow and Friday. I'm doing these on YouTube now. At least for a couple weeks, maybe 2 weeks, maybe 3 weeks. We'll see. Have a good day, everyone. I'll see you tomorrow. Goodbye.